What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 18th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to spend some time to talk about what may be the last stage of this grand altcoin cycle that we've been going through in the market. As the general larger cap plays like Bitcoin and Ethereum have started to pull back, there have been signs of hope and liquidity shift into some of the key fundamental plays in one specific sector, and that's DeFi or decentralized finance. So I'm going to be spending some time throughout today's video to give you guys some really cool insights that we've talked about all the way back in June of 2020 when we kicked off on the summer DeFi cycle of 2020. Looks like we might be up for a second shot at it. So let's go ahead and dive straight into the video, guys. Enough rambling from my end. Taking a look here as Bitcoin has again been on this pattern of lower significant highs and lower significant lows, breaking away from this declining momentous rise here for Bitcoin we've been covering back since April. And ironically enough, Bitcoin still is holding around this line chart. There's another line that we magically drew, and again, you guys can go check my old videos. I try to keep this stuff as consistent. Sometimes even when I make wrong calls, I'll leave my lines there to just kind of reflect in this case and say, like, okay, what did we get wrong? One of the other lines that we had drawn, and it wasn't even meant to be a per se precise prediction, was how DeFi or the broader DeFi sector was going to perform against Bitcoin. And what's really interesting, and we'll start off with this chart here, was the basically, and I'll kind of explain this chart here, the chart we had drawn back here back at the end of April, that takes the DeFi perpetual futures contracts that are traded on FTX. It's kind of a broad index of the DeFi sector and how it's performing, and dividing that by Bitcoin's performance. So what we're effectively doing is taking a DeFi index or a DeFi kind of weighted play here that has exposure to a variety of different DeFi assets and dividing it by Bitcoin. And what you'll find here is a really interesting pattern. We not only had this kind of first recovery wave coming back up close to the highs back here of August in 2020 at the end of the first DeFi super cycle, right? So we came back here in February 2021. We not only had a near over third correction in value here against Bitcoin, but this point of resistance, right? And I'll go ahead and just kind of make it a bit more clear here, so you guys can see this a bit cleaner. You can see here that we've got this descending line of resistance from these previous significant highs. What's really interesting, and as we pointed out back here in late April to early May, that we had broken through this point and we were getting ready to break through that point. And we did. We came back down, made that previous line of resistance support, and now we have been on an absolute killer uptrend here against Bitcoin. Now, of course, bear in mind, Bitcoin has been declining in USD value. But what this means here is that altcoins are not only holding or retaining their dollar-weighted market cap values, but outside of those, well, in many cases, if you're in the right place, you're actually growing your portfolio at this time. Now, as much as we've been very bullish on DeFi, the thing that's really important to do is to not just be bullish on the broad sector here, right? We want to try to hedge our bets in the plays that are leading the market. And this is where I want to share some kind of alpha that, again, I think a lot of people aren't aware that they can, do this. They don't maybe see the value in it because a lot of major, influencers or content creators don't talk about it. But in reality, guys, this is a very, very important tool that smart money in the market is using in order to rotate from one DeFi play to another. So let's go ahead and actually talk a little bit about how we can go about doing that. One way we can do this, first and foremost, is to take the DeFi sector and divide it by Ethereum, right? One of the things that we learned very clearly from here in March, right, the turn of the month here towards mid-May here, is that it's been much more favorable to just be in Ethereum versus the DeFi sector. Very similar to when the DeFi sector saw its peak out here in the summer and Ethereum started to regain traction as well as DeFi started to cool off, right? So when we use ratios like this, again, an important thing to note here is that it's not always telling us that one asset's going down and one's going up, right? That's not always the case. It means that overall, if this ratio, for example, DeFi perp to ETH is going down, it means here that I'm able to purchase more of the DeFi sector with less Ethereum, or vice versa, right? When I'm going up here, in this case, when the value is going higher, I'm able to exchange my DeFi perpetual contracts for more Ethereum, right? So the overall goal here is that when this is going up, right, when this is trending here from this kind of low discount range where it tends to be that buyers favor DeFi over Ethereum, we want to position ourselves in the DeFi sector, broadly speaking. And also when we get towards these range of previous resistance, we might want to consider circulating back into Ethereum, maybe exiting our positions in this case. Right? I'm not going to tell you guys what to do directly. It's not financial advice by any means, but I'm just trying to explain how to read ratios. What's really cool is we have to make these ourselves, right? So I typed in, I'll even just show you how I do it, DeFi perp, which is the perpetual futures that are tradable on FTX. I do that. But before I click on that, I'm going to go ahead and type in my next value. And maybe, for example, in this case, we want to do what we just did, which is ETH/USD. Go ahead and click Bitstamp. Notice how it won't immediately take us to the chart because we're going to be selecting our first value here for the first part of the ratio. When we come to the end, hit the enter button, and you've got this chart right here. It'll provide the exact same thing for you. I'm looking at the daily time frame. You can look at this in an even simpler time frame, over 3-day candles, right? And just kind of simplifying it, keeping your chart short. Or again, you could go even simpler. You could look at the weekly chart, right? And again, the overall thing is not to pick the absolute bottom, guys. It's to know when there's general ranges where it's more favorable to enter. I just drew these very simple lines here. And you can see that price action of the ratio here doesn't live in this range very long, nor does it live down below this line very long. So rest assured, I can usually say that it's in my favor in this case if I'm positioning myself in DeFi at this range. Now, I'm going to be the first to say this before we dive into some really cool specific ratios and plays that I'm watching in the market. I'm going to be the first to say that I was still long DeFi altcoins throughout this period of time on the downtrend. So again, had lost most of my gains compared to Ethereum, but now we set in a higher low here, and outside of this, well, we're starting to trend higher. I don't want to find myself 2 steps behind. If I would have rotated out of all my DeFi altcoin positions into Ethereum, and Ethereum starts to decline and altcoins start going up, I'm finding myself 2 steps behind. It's not a favorable position to be in when you're investing. So let's go ahead. Let's dive into some of these specific ratios. Well, a lot of you know that I've been putting my bets on one of the largest DeFi plays out there in the market, and that's Uniswap. But I have to be clear with you guys on something. The one thing I am considering is possibly rotating from Uni to some other assets in the space, because a lot of the benefits that are going to come for Uniswap as a protocol are going to come when layer 2 comes. And they've been pretty consistent on the idea that they're waiting for optimism, which is set for July. Pretty decent time frame away from where we're at right now. Well, there are a variety of other plays in the DeFi space that are using plays like Polygon out there, layer 2 solutions or sidechains in this case that allow people to actually go out and engage in the same kind of activities that they would on layer 1, but in a much cheaper fashion. Well, Sushi divided by Uni here. Again, as you can see, I've taken the Binance price feed of Sushi BTC and divided it by Uni BTC. The BTCs cross out 1 to 1, and now we actually get Sushi divided by Uni. In this case, we can see a very clear trend here that whereas Uni had been outpacing Sushi going through January, excuse me, my apologies, Sushi had been outpacing Uni in this case as the ratio goes up, right? So if the value is going up in the ratio, that means the first crypto is outweighing the other. As Uni had been a better play here over the past few months as Sushi cooled down and Uni was holding up towards its all-time highs against Bitcoin, we've now started to see the trend reversed. A line of resistance here has now been turned into support, and Sushi is starting to trend upwards and probably is going to go up to this upward range of the ratio, right? And that's a good profit range here, a good substantial gain against Uni in this case. And that's not to say that Uni won't go up during this time, right? So about a 55, 60% profit window, or at least increase on top of your existing Uni position if we were to go down up to this range, and then you can swap back into your Uni. This is the really cool thing, guys, about ratios where you can always be long the DeFi sector and ride the ups and downs, but pick up discount opportunities in different plays. Along with this as well, we've got Oneinch, right? Oneinch set in a double bottom against Uni here back on April 26th, right? A full month difference in this case. And now we're starting to set in a couple higher lows and look like we might be setting up for a pretty substantial move. And if for those of you who don't know, Oneinch is a decentralized exchange aggregator. Right, so I don't hold any Oneinch right now. I own a little bit of Sushi. It's nothing compared to my Uni position, but I'm looking to build some pretty sizable positions in these. Another one as well that's kind of taking a big DeFi play and dividing it by Ethereum versus dividing it by Bitcoin or just looking at the dollar value. We can take a look at Yearn Finance ETH. One Yearn Finance token right now can buy 20 ETH, right? And just a couple weeks back, really just about a week ago, my apologies, guys, I'm looking at the daily chart. Really a week ago, it could only buy 13.5 ETH, right? And you can see here very clearly that there's a general line of resistance and a line of support here. So we're about midway through to where we're expecting this to go, probably somewhere around 26 ETH per Wi-Fi token. Take the equivalent of 20 ETH and get 6 ETH in a week or two. It's not a bad deal, right? So these are the kind of things that I'm definitely watching in the market and stuff right now to kind of trade. The ones that are in play right now, they're still in the early stages. We are by far in the early stages here in the sense of DeFi's kickoff in the cycle if we are going to see a further extended altcoin cycle where DeFi leads. Outside of that as well, Maker to Uni, right? Maker and Uni have been kind of competing as these major DeFi protocols. It's been kind of an unspoken about kind of not per se war in the space. I don't want to say that. People I don't think are that hostile in crypto, but you can see here in the ratio, it's very clearly showing this. This midpoint here has been very important. It's been a point of support, right? It's been a midpoint of resistance, right? Resistance here, resistance here. If this pops up above and maybe goes above 150, the rest can be assured that Maker's probably going to, and the ratio in this case is going to increase from 150 to 280 to 300, which is a doubling against Uni, right? Not to say that the dollar values are going up together, down together, or one's going up or one's going down. It means that you would be able to effectively take your existing Uni and double it in this case by switching over to Maker, riding this trend, and selling around this top range. But one important thing to note, guys, with these ratios, because as much alpha as this brings here towards your positions in the market, know this, that as much as there's only probably 5-10% of traders, actually I wouldn't even say that, my apologies, that's way too kind. I would say maybe 1% of traders are looking at ratios in the crypto market who are active traders. At the same time, there are other people who are knowing about these ratios. There are other people watching us, the reason why they trade the way they do. So it's important to not get as greedy and say, oh, I'm going to wait and sell at 320 on the ratio, or 330. Set your levels a little bit lower. Set your expectations a bit lower, right? If you're already outpacing Bitcoin, you're already making tons of profit in the sense of US dollar terms, there's no reason to get greedy, guys. Another one here as well that I'll wrap up on in regards to the ratios is another double bottom of curve against Uni in this case, right? Uni being the largest play here can be really great for some of the ratios because a lot of people are comparing, okay, if I'm positioned in the largest decentralized exchange in the space, I have to see these other players doing better, right? So you can see here that we're on the lower discount range for curve against Uni, and it looks like it's starting to trend up a little bit. Now, on a fundamentals basis, I think Uni V3 with layer 2 is going to remove any need for curve finance, especially with the adjusted liquidity provision fees. But that being realized, we're not really debating fundamentals here, we're looking at the chart. And I would say that the closer this gets to breaking this previous support range and what is now acting as resistance, which is 0.12 on the ratio, this thing could really start to leap up and double against Uni, right? So all of these are different plays that I'm watching. They're active plays within the DeFi space, and they're plays that many of which we're trading back during the summer. Now, one last play that I do want to share here, which is a play that I'm helping to advise for, is Warp Finance. This is one, again, that I would highly recommend just watching whether or not this continues to hold higher lows and break out above this line of resistance. It's building into an ascending triangle here. But again, I'm a bit biased. I have worked with the project in this case, so it's just trying to share in this case a bit of different DeFi plays in the space and explain here about some of the technical patterns that we're watching for, some of the sleeping giants in the space that again are offering unique services. And no matter what the project is, I know one we actually didn't look at is Aave. That's a great one we can take a look at, right? If we take Aave BTC, and I'll go ahead and just kind of walk through the ratios here and how you do it. Aave BTC, divide that in this case by Uni BTC. Right? So we've got, we're going to use Binance price feeds for this. Go ahead and hit enter. Look at this, right? We're going to go ahead at the auto chart here. And what would you know? Though the chart is a bit squeezed here, so maybe I'll take it to the daily chart so you guys can see this a bit better. And sorry for the big random candle that just messed up the chart. That's typical with a lot of exchanges, especially Binance. But would you look at this? Smart money came back to buy it right around the low range here from back in September. if you would have taken your uni positions here at 10, right, and switched it into Aave, you're almost on path here to go to 20 on the ratio where you double your uni position, right? And so again, the thing here is that I think we're not at a point where you're going to find yourself 2 steps behind. And I say that as someone who's got a pretty large exposure to uni in this case, that there are some good DeFi plays in the market that are charging forward, that are still in the early stages here. And that's to say if we do peak out at this range. I'm sorry, I'm sorry, I'm getting a bit scattered here. When we go back to this chart in this case for Bitcoin, DeFi against Bitcoin or Ethereum in the ratio. That's to say that we're only going to go up to this range, right? There's really no limit right now. We have no previous resistance. We have no scale to work with here. DeFi has by far outperformed Bitcoin. And now it looks like it might be in a position, whether it's in the short term or long term, to outpace Ethereum. So that's it for today's video, guys. I appreciate you guys giving me the time to ramble here. If you liked the video, consider dropping a like, consider subscribing as well if you haven't already. But that being said, everyone, have a wonderful rest of your day, and I'll see you all in the next one. Take care, everyone.